closely. Before this week ends, it's important to understand what this Bitcoin rally represents. The entire market is celebrating the push past $95,000, and they are all calling for $100,000. Many are walking into a classic bull trap. They are looking directly at a setup in plain sight. This rally is not an opportunity. It is a mechanism that will liquidate late buyers. This is not the start of the next great bull run. This is the final deceptive move before a significant crash that will severely punish anyone who is not prepared. On-chain data suggests a high percentage of the volume that broke $95,000 was phantom volume, an illusion created by derivatives markets designed to draw in liquidity before the rug is pulled. This is not fear-mongering, it is a critical warning. In this video, I will lay out the evidence for why this rally is built on a weak foundation. I will show you the historical cycles that make a deep, painful correction not just possible, but highly probable. And I will give you the exact sequence of events that needs to unfold before the real bull run can begin. What you are seeing on the charts is the setup. The crash comes first. First, understand the bait. Every effective trap needs something irresistible to lure participants in, and right now, the bait is powerful. After a volatile 2025, Bitcoin coiled for weeks, and now that spring has been unleashed. The breakout this week was technically strong. The price pushed through resistance, hit a 2-month high, and confirmed a higher high. Traders are becoming convinced a rally over $100,000 is now a certainty. But the story the price charts are telling is deceptive. The narrative being pushed is that institutional money has returned. They tell you spot Bitcoin ETFs just had their largest single-day inflow in 3 months. They point to Fidelity's FBTC fund pulling in $351 million on Tuesday alone. They show you a chart with clear skies to $100,000 and tell you the path of least resistance is up. This is the narrative you are being fed. It's clean, compelling, and deeply misleading. Markets warn with their structure, not with headlines. And the underlying structure is flashing clear warning signs. Now, let's pull back the curtain and look at what the headlines are missing. While the price prints new local highs, the market's foundation is showing cracks. This is not strength. It is a house of cards in a hurricane. First, that low volatility was not stability. In Bitcoin, low volatility is often the quiet before the storm. It's the unnerving quiet that signals complacency and the evaporation of real liquidity. The market is dangerously top-heavy, with capital chasing Bitcoin while everything else bleeds out. This is not a healthy, broad-based rally. It's a concentrated bet that is positioned for a sharp reversal. This explains why most altcoins are struggling. There is a lack of real, broad conviction. On-chain data is showing multiple red flags. The price pushes are driven heavily by derivatives and short squeezes on phantom volume, not real organic demand. This is not an organic rally. It is a setup for a sharp reversal. The market is being wound like a spring for a sudden, violent move down. Worse, the price is running straight into a fortress of sellers. A dense wall of supply from the 2025 highs is waiting right above us. We are not breaking into clear skies. We are approaching the levels where investors have been waiting to sell at their break-even point for an entire year. This brings us to the most critical piece of the puzzle, the echo of history. The mainstream narrative, fueled by ETF hype, suggests this time is different. History suggests that it is rarely, if ever, different. Bitcoin's structure is rooted in 4-year cycles of boom and bust, and the clock is ticking with remarkable consistency. Look at the pattern. It is objective and has been remarkably consistent. Bitcoin cycles have historically followed a similar rhythm: a bull market peak, followed by a brutal, year-long bear market that erases a significant percentage of its value. This has been the result of every major cycle so far. The peak in late 2025 fits this model. The historical template provides a clear template for what to expect. A peak in late 2025/early 2026 suggests a cycle bottom is projected for the fourth quarter of 2026. A drawdown from the $126,000 peak points to a price low enough to cause severe financial pain for those who refuse to see it coming. This is how every cycle has resolved. The market has never spared those who ignored it. This is not a fringe theory. This is a blueprint. The major corrective years for Bitcoin were 2014, 2018, and 2022. Following that 4-year sequence, 2026 is next in line. The weakness we saw in late 2025 is a direct echo of the weakness in late 2021, which came just before the major collapse of 2022. This rally is a bull trap, a final, sharp surge to pull in maximum retail liquidity before the floor gives out. But a fragile market and a historical cycle are not enough. They need a trigger. And in 2026, the global stage presents several potential triggers. A fragile market does not fall on its own. It is pushed. The trigger for collapse is almost always a macro shock that forces a massive, system-wide deleveraging. Do not believe the narrative that Bitcoin is a safe haven. Not yet. In the first phase of a crisis, Bitcoin has historically acted like a high-risk tech stock. When risk-off panic ignites, capital flees from crypto to cover margin calls and piles into traditional safe havens like gold. This is the probable sequence of events. The shock. A geopolitical event or a credit crisis emerges in the global markets. The liquidation. Fear goes vertical. Institutions and leveraged traders are forced to sell everything they can. Bitcoin, with its 24/7 liquidity, becomes an emergency ATM. The thin liquidity in the market acts as a massive accelerant, creating a liquidation cascade that could cause catastrophic losses for the unprepared in hours. A drop could happen so fast that exchanges struggle to handle the traffic, leaving many unable to react. The intervention. The crash becomes so violent it threatens to impact the broader system. At that point, governments and central banks may do the only thing they know how: turn on the money printers. This is not speculation. This is the playbook from 2008 and 2020. The crash comes first. The pain comes first. The system must be pushed to the brink before the real money printing begins. This current rally serves as fuel for that fire. The drop will be sharp, violent, and it will convince many that crypto is dead. And that is the exact moment the real bull run begins. After the crash, after the forced liquidations, and after the system is purged, we enter the final phase: debasement. When governments print trillions to address a crisis, they debase their currency on a scale that is difficult for most to fully comprehend. You can print money, but you cannot print oil. You cannot print food, and you cannot print Bitcoin. This is the moment Bitcoin's core value proposition becomes a primary exit from the uncertainty. In a world of infinite government cash, a provably scarce, decentralized, censorship-resistant asset is no longer just a speculation. It is a tool for survival. This is when the narrative flips. The institutions that just panic sold will be the same ones competing to get back in, desperate for a hedge against the monetary chaos their own governments created. After the crash, a clean market emerges. The weak hands are gone. A new accumulation phase by patient, long-term holders begins. This is where the mind-bending price predictions could become reality. Projections of $150,000 or higher for 2026 are not necessarily wrong. They may simply have the sequence of events backward. First comes the crash, then comes the rally. The next true bull run will not be driven by hype. It will be driven by a fundamental breakdown of trust in everything else. But to get there, we must first walk through the fire. Let's be perfectly clear. The rally pushing toward $100,000 is a mirage. It is built on phantom liquidity and is about to hit a wall of sellers. It is ignoring the flashing red alarm from the 4-year cycle that points toward 2026 as a year of deep correction. A global shock appears likely, and it could trigger a liquidation cascade that will severely punish those who are unprepared. But that crash is not the end. It is a necessary cleansing. It is the setup for the most powerful bull case Bitcoin has ever had. The likely government response, unlimited money printing, will create the perfect environment for a scarce digital asset to dominate the world stage. The winners of the next cycle will not be the people chasing this rally. They will be the ones who understand this sequence, who stay patient, and who have cash ready when there is blood in the streets. The pain comes first. The real rally comes after. The structure is in place, and a trigger is fast approaching. To see the signals as they appear, you will not want to miss the next update. Your financial positioning for the next 5 years could be defined by what happens in the next few months.